Greetings and salutations, everybody. Hope you all had a great week. And sorry for the delay. Having trouble with some login issues with StreamYard. But it looks like we are up and running. Our Dow Jones Industrial Average, S&P 500, and NASDAQ are all down, including the Russell 2K. Stocks open lower, pressured by higher rates and rising oil prices. The VIX is up 9.53%. It is up to 21.04%. Europe is mixed, mostly up. DAX is the only one down slightly. Asia is mixed, mostly up. Nifty 50, one down, almost 1%. Japan leads Asian markets higher. Nintendo rallies after Saudi fund reportedly looks to raise stake. Ain't that something? In case you haven't heard, the port strike that is affecting the East and the Southeast is on hold until January. And so that is one less thing to have to worry about for right now. In terms of what was reported or highlighted by earnings whispers after close today is Duckhorn portfolio. There was nothing this morning. Tomorrow before the open, we got PepsiCo, we got Accolade. After close tomorrow is Saratoga Investment Corp. Wednesday before open is Helen of Troy and Byrna. After close, look at that. We got some closing. Wednesday after close. Applied Blockchain. Also after close, Bassett, E2 Open, and Richardson Electronics. This is where we're stepping into the tech space a little bit with the Applied Blockchain being part of the software with E2 Open. And then components is Richard Electronics. All right. Thursday before the open is Tilray, Delta, Domino's Pizza, Thera Technologies, and Neogen. And then after close on Thursday, we got Air Test Systems, which also deals with components as well. Friday before open, we got the banks stepping on in. JP Morgan Chase and Company, Wells Fargo, BlackRock, BNY, which I believe is Bank of New York. Fastenal is stepping in too on Friday before the open, and then Bank 7. So that's before open. Sorry if I said after. Before open on Friday. That is what's happening with the banks stepping up to the plate. All right. Good morning, Richard. Good morning, Janae. Good morning, Margaret. That's what we have going on for that. Our calendar for Forex Factory. We have yellow folders today. There are 4 of them. At 1 o'clock, FOMC member Bowman is speaking. At 1:50, FOMC member Kashkari speaks. At 3 o'clock, we have the consumer credit month over month. And then at 6:30, when we're up out of there, FOMC member Mosalem speaks. So those are our 4 yellow folders, which could very well mean, quote unquote, lower volatility, right? There's no proof that that's what that means, but it is what it could mean. Could be lower volatility, right? Let's look at what's going on for the economic investing.com data. And we're going to hit refresh to be on the safe side. All right. So we got one star at 11:30. So we have, let's scroll up a little bit. Today, we're going with the Medicon. So we got the CB Employment Trends Index for September is 1 star, being reported in 6 minutes. At 11:30, the 3-month and the 6-month bill auctions is 1 star. Okay. 1 o'clock, 2 stars over here. FOMC member Bowman is speaking. 150, 2 stars over here. FOMC member Kashkar is speaking. Right. So yellow folders on the other one. Over here is 2 stars at 3 o'clock. I'm sorry. No, I'm sorry. I'm saying that wrong. Kashkari. So 1 o'clock is Bowman. 150 is Kashkari, 2 stars. And then what is that? 3 o'clock. Consumer credit for August is 2 stars. And then 6 o'clock, 2 stars. Remember, Bostic is speaking. So we have 2 stars over here, whereas they may have been yellow folders on the other side. Again, take that with a grain of salt. Just be aware that it is happening. All right. What I like to do is keep my browser up and then refer back to it throughout the day, so I will remember what what was happening and what I need to look out for. All right. So, good morning, Lisa. Good morning, Raymond. Good morning, Ward. Hope you all had a great weekend. All right, let us mosey on over. I was waiting to see, I believe Arlissa is dealing with some tech issues and should be on shortly. Hold on 1 second. All right, we are going to switch on over to our charts. Let's look at the charts. If you have any ticker that you would like for us to look at, go ahead and drop the ticker. Let's see what we can come up with. I'm going to be nice to y'all on today and start on off with SPY. Because I know some of y'all like SPY, Miss American Pie. All right, so here's what's going on. SPY and XPX will look similar, but we're going to start off looking at SPY. So this is the daily chart. Let's take a look at what's happening here. This is the high, all-time high right now. For SPY, 574.71. Okay, we had a gap up back here. This is September. Do you remember? This is September. And this created, when this gapped up, created this gap. And each time it has come back down to this gap area, it has bounced off of this gap. Right? The low here is 565.17. The low here is 565.27. It has respected this gap so far. All right. Now, for some people, that don't mean nothing. And for others, that means everything. So it just depends on how you look at it. At the end of the day, I see it as if it's still respecting it, then it is of some significance. Right? This was the second gap. There was more space here. And it actually closed this gap that was here. We had this mark before. So that was there. Pushed it to the gap. And now we got what's happening right now. Okay. Now, here's the thing. When this closed, it closed at 572.98 up here and opened at 571.3. We do have now another gap. that we can mark. And I'm going to put it right there. Right? Close up here, open, pushed up a little bit. So we have some space in here that it's going to want to fill at some point, I'm sure. We're looking on the daily chart as a reminder. Looking on the daily chart. However, when we zoom out, we had this conversation before when we talk about candle patterns, and we would say that the candle patterns, usually there's a pole, a run up. Let's say run up is south to north, and you can do south to north and stop here, or south to north and stop here. But the one thing we do know is that south to north, it comes down, it goes up, but these sellers is getting lower. So the buyers are staying stable. These sellers seems to be getting lower, right? So what candle pattern does that look like? Sellers lower, so the highs are lower, and the lows are staying stable. North to south. See what we got. There may not even be one that matches it. It looks like this, right? The highs are getting lower. North to south pole. The lows are relatively flat. So this looks like it could be a bullish wedge. Nothing is guaranteed, of course, but based on what I'm looking at, I'm seeing a possible bullish wedge right there, right? And if you need a little bit more help seeing it, I'm looking at, let's say, here to here. If you want to go here, and let's say, we'll even go right here, right? And then go here. So let's say if we use this as reference points. It's not exact, but let's say if we use it as reference points. All right, so if we were to use this as a reference point and pull this down, let's say we doing like this. And the reason why I'm doing it this way is so that I can connect as many of these wicks up here as possible, right? So we got these are this is where the buyers are, right? So this is relatively flat here on the lows, and this is trending down. So that's where I get this from, bullish wedge. And I'm looking on the daily, right? So what that says to me, it wouldn't surprise me if it bounces through here a little bit more, and then at some point breaks out of here. But that's what I'm looking at for SPY, right? Now, obviously, for those of us who chart different ways, we have leg in, probably 2 in the base, leg out. For a buyer zone right here, that's above this gap. And then maybe leg in, base, leg out right here. With this candle being the one for the high. But either way, no matter how we decide to do it, we need to know where the sellers and the buyers are. For right now, this is buyer's gap. We still got us some buyers down here. If we look at the options chain in this situation, this is not investment advice, but let me see. Hey, Lisa, Lady T, Bobby Reynolds, good morning, all. I see AMD, Amazon, Google, and Triple Q. We will put those on the list for SPY. I don't do 0 DTE, but I know others do. So right now, too early in the morning for me to get in, but I will be looking at a call credit spread since it's a bullish candle as of right now. And I'll be going 84% out the money. Now, mind you, you got to ride this all day, which I would not want to do as of right now. But on the one spread, this would be 11 cents, so $11 on $100 collateral. So that's 11% return on collateral right there. Right? So this is what's been going on over the past couple weeks for SPY. SPX follows the exact same path, except it's just a little bit different when it comes to the candles. It's not the exact same look. SPY is an ETF. SPX is cash settled index. One thing I did want to look at before we go the other way, this is what it's looking like on the 15-minute chart, which on SPY, the 15-minute chart, it's not as fun to look at as it is on SPX, but it is just to show that not only do you have activity happening, but right here at 8 o'clock before market open, there was this nice spike right here. The sellers really pushed this down. So that's something to be aware of as this tries to probably push into this gap right here, right? So we'll see what ends up happening. All right. We'll look at SPX so that we can mark the 15-minute. And we'll do this. Whoops. We're going to highlight the 15-minute. So this is the gap. 15-minute gap. And the arrow that I put on the text, when I put the text in, the reason why this arrow is pointing down is to let me know what direction it gapped down. So that way, when I see it, I automatically know this was a seller's gap because I'm pointing the arrow down in the same direction that the price gapped. So that just helps me in terms of remembering what was going on with the actual movement of it. So here's the 15-minute breakout. This has not had a breakout yet, but the 15-minute candle is here. And I'm going to delete this one. So this is not fully broken out. It did pop out a little bit, but did not do that much. So we're sitting right here. So just to paint the picture, this was a gap down on SPX. This is a 15-minute candle. It is not broken out quite yet, but it is definitely hanging out, trying to figure out what it wants to do right now. All right, so you still got some time. Chances are there's a very good chance that Russell 2000 may already have broken out, which this is the case here. So here's Russell 2000. It also gapped down and has broken out. Russell 2000 is also cash settled index, and IWM is the ETF for Russell 2000. So their charts may look similar since they're both based on Russell 2000. So this has broken out, right? And the thing to keep in mind about these breakouts, so get a breakout, but in this case, it can always turn around and start heading the opposite direction. That's the only tricky part with the breakouts, is that you have to be aware that this does not necessarily last all day. 15 minutes. Some people trade the 30-minute breakout, and but that's what we got so far in terms of the breakout. So right now, Russell is sandwiched in between two gaps at the top and at the bottom. All right. Let's take a look at Triple Q that was requested. It has been doing a nice run up overall. Clear drawing set on the monthly, right? This is nice. Back here in August, it came down and had a strong reaction of buyers right here. So that was good. The weekly, of course, it's trying to move its way on up. This is a strong zone up here. This is a great formation. Leg in, base, leg out. That's extremely strong seller zone formation. Here's another one down here. I don't always love these longer candles for bases, but in terms of the way it looks for formation for a leg out, that is looks pretty strong, right? So it's definitely trying to climb its way back up to 503. And then we have this here. And quite a few of our charts will probably look the same and or similar. So there should be no surprise there. So this is the gap that we are marking. And let's go here, here, here. All right, close was 471. So we're going to close, open. So this gapped up again. This was a buyer's gap. I want to put that. And this was so I'm going to put daily gap. All right, this is a buyer's gap. So we want to acknowledge that. Actually, I'm trying to get this text note. I'm going to make sure we know that this is daily gap. That's the direction that it gapped up. All right. This may be the same situation. If you look, when we were talking earlier about that bullish wedge, south to north. I might have said north to south run up. Sorry. This is south down here. South to north run up this direction. Bounce, bounce. Relatively flat on the lows down here. The highs are coming down. So this may be the same type of situation where we are looking at a possible bullish wedge, right? As of right now, not a whole lot of activity happening. I will put the seller zone up here, leg in, base, leg out. And I'll put the buyer zone right here, leg in, two in the base. I really don't like that leg out, but that's what the defense is giving us. So we take what the defense gives us. But there is a small gap right here. We want to make sure we add in to the mix because it is there. I'm going to open this up so you can see it clear. All right. Then we're going to check out the options chain. See what the options chain has to say. That's what we have going on. Drop these in real quick. Boom, boom, and boom. I'm putting in these lines to represent the seller zone up here and the buyer zone here. So right now, Triple Q is kind of sitting in between both, right? So it's fluctuating, which means depending on what side you want to get on, um, we're sellers. So call credit spread up here or put credit spread down here. Um, Again, not investment advice, just depends on what your proclivity is. Kind of early in the morning for me, but to be getting in, but I will investigate. So we said we decided to go, let's say with 482. That's putting us 482 is in this area. 482 is basically in this gap that is still left over, right? So decided to go with that. This is a one spread, and this is assuming that this is today's expiration. Also, that would be 11%, right? Or some sorry, 11 cents, but 11% return on collateral. So that's $11 on $100 collateral. If we went with 482, 481, which is 83% out of the money, pretty decent for sellers. We went with 85% on the call credit spread side. It's about 12 cents. So if someone's thinking about an iron condor, that's about 22 cent on 100. So $22 on $100 collateral, which will be 22%. 22% return on collateral. So we're sitting right there in the middle. And I'll be looking at this 487.88. It's got these highs, closer highs, higher points that it might try to break past. And this is a situation where I would definitely be watching the CNBC. And I'll be checking these to see how these are moving right here, to see if these are still down or if they're switching up, checking to see if the VIX is still rising or falling. All right. I don't know if y'all recognize this guy right here. Some of y'all might recognize him. Was he in Star Trek? I think he was I think he played Dr. Spock in Star Trek. But I know him for playing Siler in what was the name of the super? It was called Heroes on NBC. It had a show called Heroes back in the day. And he played like this dude named Siler. He played it so well that I can't see him as anybody else except that villain. We did that good of a job. You also have up here a little bit of space in terms of a gap. So Triple Q has a gap right here. Right here. So it's trying to fill a gap there as well. All right, so we have some resistance so currently surrounding current price as it relates to Triple Q. So kind of sandwiched in right there. GOOG. The next one that we'll do. All right, I can take. I don't necessarily like this formation, but this is what I see. All right, so this happened. the gap down over here. So I'm looking at this. I feel like I might have tried to Google on the weekly chart. Very well possible with all these small candles. So this would be leg in, two in the base, with a gap down here for a leg out. It has not been back up this high. There's still a little bit of a gap up here. And I mark these gaps because they matter for me in terms of support and resistance to give me a better visual of what's happening. Right? So this closed up here, open, came down. It's been filling up ever since. But the more importantly, when it has come back to this gap, it has bounced off. Right? This is a seller's gap. So this is the daily. And both of these are daily. Right? These are both daily gaps. And I make that distinction because sometimes you'll see 4-hour gap. You'll see, depending on which one you're looking at, which time frame. Again, I don't love these formations. I'm just charting what I'm seeing over here. I don't like that leg in, base, leg out. It's very ugly. If I was going to do it, I would do this. But with all of these wicks, again, I'll be more likely to see what this is saying. And this is speaking my language a little bit more. So this is the weekly. And I would see leg in, base, leg out here. Better looking formation. Leg in, base, leg out. This is a cheer formation here. I like that. These are much clearer in terms of their formations. So I will be happier with these. Way happier. Looks like this might be going all the way up here. Then we're going to look at the options chain. Oh, yeah, I can live with this. All right. Leg in, base, leg out. Up here, right here, leg in, base, leg out. Right? And you got this activity here. And we can do, matter of fact, I'll put this in dashes since we're sitting right there. And we're in this zone currently. And then I'll do this. I can live with that one. This I can live with. I can live with this one. All right. I like this one a whole lot more. Hold on 1 second, please. My microphone just popped off. All right. But if you look at what's happening in this situation, weekly is a higher concentration of numbers. And even from the weekly, you can see that the gap that was created during the day is still providing that resistance right here. You know, that's still all of that stuff on the daily is still valid. I'm just looking at a higher concentration of numbers on the weekly. We can always switch back and see what ends up happening here. Mm-hmm. And if we're looking at Google for this Friday, let's say, and we went, this is a 2.5 spread, which is about 23 cents. 2.5 spread is $250 of collateral. 162.5 is in right about here, is where you're looking in terms of where that puts you, which, depending on how you chart this, would be one buyer zone. But also there's a gap here. And again, we're back on the daily, and then a buyer zone down here. Right. And then of course up here you still got all kind of resistance. And then you can always increase this to make it 10% of your collateral. That's always possible. Also, you could go with, say, 78% out the money. It's closer to 80%. That would be 40 cents. So well over 10% return on collateral. If you decide to go that route, it is higher on that side. Price is pushing up closer to that strike. So we're looking at, if we were looking at 175 is up here. So we're above this gap. What that is. So you definitely have. I would, if I was looking at it, the reason why I wouldn't look at an iron condor based on what I'm seeing so far. 10:30. So I know some folks is getting in anyway. All right. So at AMD and Amazon. So yeah, I definitely would be looking at Iron Condor for that one. All right, hang on 1 second. AMD. All right, this is what I'm seeing monthly. This is on the uptrend. We're looking at it from this perspective. This is definitely on the uptrend on the monthly chart. For those of you who do broadening formations, I would imagine that you would see this going this way on the monthly chart. probably a couple different ways you can do that, but the one that caught my attention first was this one. If you're doing broadening formations, it might look something like that. Pro, it needs only 2, so we can do that. Or we can just go like this. All just depends on where you want to set that. But I'm trying to just make sure it touches 2 wicks on its way down. Something like that. For the broadening formation, people. So that would probably look something like that. But we're looking at the monthly on this one. The weekly, very nice zones. There's a seller zone right here, very strong. Leg out. There's another seller zone right above it with a huge pressure. There's some sellers up there for real. And then we have a buyer zone down here. And I think we would consider this one a buyer zone as well. Right there. So we got some strong zones coming up when we get down to the daily. And I see a gap right here that has been filled to some degree. All right. And yep. I marked that, and that was a seller's gap. So I'm starting to fill that in. I believe most of us who do formations will probably see this as a shear formation right here. We can mark that here. There's our seller zone. And more than likely, we will have this as a buyer zone because we also have a gap here. Right? Again, these gaps provide support and resistance. I simply use them as a buffer, a sense of protection, a hedge, if you will. You know, the same fence you want Jesus to be around. You know what I'm saying? Just to be on the good side of what I need. So as you can see, this is providing resistance right here. This is where it gapped down, coming back. It's respecting this area. So this will be something to keep in mind. And based on the fact that it is still trending up, it's still on the uptrend, right? But now it's starting to hit that resistance. So something could be happening rather soon. So I definitely will be watching that. And then in terms of the options chain, why not go above 177? So we got, you can do 76% out the money. You can do 82% out the money. Trying to go that route. So this is a 2.5 spread, which is $250. 35 on 250, well over 10%. As if you are choosing to go this route, remember that it's trying to push up. So that's something to be aware of. If you decide to go downstairs, go for the put credit spread. I'm seeing 36 cents for that on the bottom. And I'm only looking at both of those because of where this is kind of sandwiched in between two of them. So if we're looking at either 157.5, if we're looking at 160, talking in here. So you sitting, this price right now was sitting right in between both of these. So at least right now it's fluctuating up and down. So that's pretty good. 36 on 250. Again, well over 10% return on collateral. So both of those on each side on the same $250. It's not bad for Iron Condor. So I'll be looking at that. Before we finish up with Amazon, let's just swing back and take a look at SPX and see what SPX is talking about. On the 15-minute chart, SPX has not broken out yet. It is not broken out yet. Let's see what Russell has. Not only has Russell broken out, but it has also came up and retested right here. Interesting. Okay. Nice. All right. So what we want to do also, I got to make sure we do not do Mancini's numbers. So let's make sure we get this taken care of as well. And the Mancini is where we go to do our conversion from ES to SPX. So we're going to do these numbers. And we're going to take care of this right now. So we will have those numbers. All right. Difference right now is 55. 5805 minus 55. So it's 5750. 5750. 50. And we will be posting these in the Telegram group so that our people can have it. And I think that's 15. There you go, 5750. Hashtag SPX. Yep. And then what is it? 5782 minus 55. 5727. 5727. All right. Y'all, my Steelers lost yesterday. Y'all don't understand. Cannot believe They played as though I was on the team out there playing, Chief. What happened? 5805 minus 55 is 5750. All right. We stunk up the joint and we was at home. It's even worse. 5708. 5708. See, that would have been the time that the Broncos fan should have been talking crazy. This is when we was playing Cowboys fans. Would have been perfect time. All right, here's what we got for the Mancini numbers. Let's move this back. After Friday's rally, the 5750 target, as warned in newsletter, we get the Monday morning hangover in SPX, where we sell off Sunday, open into Monday, and we got it. 5727 resistance as posted here now. Huge test. If bulls can accept it, 5740, 5750. Next, if 5708 fail, triggers next sell. Right? 5708. Bring this down to probably 13. So 5708 is what we're going to be looking at the bottom of SPX. 5708. Keep that one in mind. All right. We're going to put this in our Telegram group. Make sure the crew has it. Team. Yeah. All right. That's what we needed. Let's do that. We'll copy this and put it in Telegram. Yep. Make sure Telegram get it. If you have not joined our membership, feel free to join our membership. educatedtrader.com. Go ahead. You got a group of people that are on the same mission as you are, trying to be on their grind as well. But I can definitely tell you, it always helps to have an extra set of eyes on the trades, to be able to ask people what they're looking at and what they're seeing as well. So that helps. As of right now, we're looking at Russell. Russell is coming down to a gap. So I'll be watching that to see what's going to happen. Of course, you can always turn it around, or can push on through. I'm not necessarily seeing enough in terms of volatility. It's less than 1%, so I don't know. That might not push through there. Who knows? But we'll see. All right, Amazon. Amazon got so much stuff going on in terms of products. It's crazy. They got Prime Delivery happening, which is the drones that they're already testing that out. So this is the monthly chart for Amazon. Nice run up. 151. This area right here is one to watch. Strong reaction from buyers there. This is the weekly chart. This is a zone up here. This is a nice leg out here. leg in, 2 on the base, leg out. There's a huge formation right here. Leg in, base, leg out. And this is its current retrace on the weekly. Here's what I'm seeing on the daily. Is this tiny bit of a gap up happened. Leg in. I don't even know how to do this one. Well, leg in, base, leg out. It's funny looking because this is probably meant to go like this. Because of how weird it looks. Leg in, 1 in the base, leg out. I don't think that's supposed to be a chair in terms of the formation. Duplicate. This is happening here. And one thing I do want to point out for this chart on Amazon, you see these two right here have stopped at almost the same place, but these are zones, right? So this is stopping in about the same place. This is a pair. This is what is called a parity line. This price point over here, this was support. Over here, that price area was resistance, right? It broke through, and when it came back, it's support again. So that's definitely a price zone to pay attention to, because there's plenty of activity surrounding that area. Here's a gap right here. And this was a seller's gap. Gap down. So that's where I got that from. This is a gap down. It's a parity line. Obviously, something's going on with this price. Then I put this in here as the buyer zone. So seller zone, buyer zone. Let's see what the options chain is saying. 175 for this Friday. If I was looking, I'm not telling you to look. If I was looking, that's about 10% return on collateral. 175, 172. So 175 is right here. So that is the actual. This is a proximal line of the buyer zone. Then above that, that's over 10% return on collateral as well. These are 2.5 spreads. So $33, $34. If that was an iron condor, that wouldn't be bad for $250. And that was one. So that was up here. So definitely above this sell zone. Right? So you got that. I'll be looking at those areas myself. Whew. It is some money out here, baby. All right. One more time. Let's swing back to SPX and see what we got. If we got a breakout on the 15-minute chart, We do not have an SPX breakout yet. I'm surprised. What's crazy is that inside of the 15-minute candle formation, so this is the top of the 50, this is the 15-minute candle, the first candle. We marked that for the breakout. So for SPX, it has not broken out yet, but it has inside of its 15-minute candle area created what we would know as a seller zone. Leg in, base, leg out. And it also created a buyer zone. If you want to consider this a buyer zone, this wick being so large as the base, some people don't consider this a legitimate zone with the wick because it makes the price action pretty much equal to, possibly greater than the candle that's the leg out. But definitely seller zone is created inside of its 15-minute zone. Russell 2000 has broken out. Look at Russ. Janae renamed this to Russette, actually. So look at Russette doing her thing. All right, Russ. So that's what's going on for that. We shall swing one more time again. Look at our latest stats. The Dow Jones Industrial Average is down 0.31%. S&P is down 0.32%. NASDAQ is down 0.42%. Russell 2K is down the most. Man, almost double. Definitely double these two. 0.71%. The VIX is up 8.43% to 20.83. That is what is happening. Switch on over to the benediction. Our E2T daily declaration. By faith, I'm a successful trader. I'm a wise and knowledgeable trader. I make smart and lucrative decisions for my portfolios. Money likes me because money is comfortable around me. It is drawn to me. E2T daily prayer. Lord, give us wisdom and knowledge for our trades today. Help us to make smart and lucrative decisions for our portfolios. All righty. Thank y'all for coming in this morning and hanging out. Please don't forget to hit like. If you got something out of today's stream, also feel free to subscribe. Totally appreciate that. We got E2T freebies that are available for you if you are so interested. That's E2T freebies, FREEBIES.com. Right? Those are free resources that are available. E2T-freebies, FREEBIES.com. Go ahead and pick up some of those tools to place in your toolbox as a trader. Okay? Go ahead and check those out. Of course, we have other trainings that are available at educatortrader.com. So please check that out as well. Another resource I want to point you in the direction of is there's a Chart Your Way to 100K is another one that I like. Chart Your Way to 100K. So that's another one you might want to check out. Definitely great information that is in there. You want to take a peek and add some more things to your toolbox. That is another one. We have a trading strategy for you if you want to know what trading strategy is perfect for you. And then the how to make 10% every single day with the zero DTE options. All right. So we have plenty of things available to add to your toolbox if you are interested in being a seller. These are some good tools to add. So please definitely check it out. Again, subscribe, click like. We appreciate having you. You all have a great day. Remember, stay green and get this money. That is what we are trying to do. You all have a good one.